Hello, it's Dominic Fonte with the 2024 real estate market update. I've been getting a lot of questions about what the heck's happening in the real estate market with the interest rates, inflation, and are we going to crash sometime this year? I believe the outlook looks really good for us. Without a crystal ball, just looking at the facts, let's just go back a second, look at a few graphs, and one of them I want to show you is, are we in a seller's market, a buyer's market, or a neutral market? Take a look at this graph. So when you see 6 to 7 months in the middle, that's the gray area. That would be called the neutral market zone. We haven't seen that since 2007. And that just means that there's a good balance between how many buyers are in the market, how many sellers are selling in the market, and how long it takes to absorb that inventory. But if you notice the last several years, you've been hearing a lot about the sellers are getting so much money for their house and all these things are happening. They're waiving inspections, the buyer's buying them because they're so desperate to buy them. Well, that would be a seller's category, and we're hovering around 3.5 months inventory. And as long as we're below 6 months, it's really favoring the sellers. So there's a strong appetite for real estate, even if the rates are a little bit higher. The next graph that I'd like to show you is even in this market that we're in with higher interest rates, hovering about 6.5%, the 43% of all the homes right now are selling within the first 2 weeks, providing the location, condition, and price are correct. The next graph we're hearing a lot about is the appreciation. What is realistic appreciation if I buy a piece of real estate? Well, during and after the pandemic, if you really look at those dates and times, you'll see on this graph that for the past 42 years, we hovered around, I'd say 4.5 to 4.9% appreciation. And the reason why it's a little bit higher is because 21 and 22, we had about 20% appreciation. And if you know anything about real estate, that's not really sustainable. And I would say realistically, 4.5% is probably more realistic. So if you look at the 42-year history, you're going to notice that really there was only one spell where we lost value, and that was during the crash of '08. Now, moving forward in 2024, you look at the foreclosures. I heard a headline say, foreclosures are up 115%. Well, let's take a look at that graph. So when you look at coming off the debacle, say, 8, 9, 10, 11, and 12, we were hovering about 35% foreclosures out of every sale. And many of those homes didn't even have copper pipes because people stole them. And then it wound down all the way to 4% in 2020, pre-pandemic. And then there was a 2-year moratorium because when they made everybody stay home and people lost their jobs, they gave them a reprieve from foreclosure for 2 years. Well, now they started the foreclosures back up in 2023, and you could see there's an uptick. But really, when you look at it, it was only 1% foreclosures in November. And if you look at pre-pandemic, it was really averaging around 4 or 5%. So really, when you look at the foreclosures, it's very conservative. Now, I like to look at also the lending standards because what led up to the debacle in '08 was loosey-goosey lending practices. The joke always was if you could fog up a mirror, you can get a loan. So take a look at this next graph. So you can see the spike here, and that spike represents the higher the number, the easier it is to get a loan. And then in '08, when the market tanked, Dodd-Frank Act came into play from Congress. They put very stringent guidelines on. And then for the next few years, it was pretty much tightened up, right? Then the pandemic happened, and then it even got more conservative. So from a lending standpoint, foreclosure standpoint, supply and demand, right now it's favoring that we are looking forward to a very strong real estate market. The U.S. is sitting on a lot of equity. If you look at the graph here, it's 68.7% either paid off their mortgage or have 50% or more equity. Now that's good news because we're wealthier over the last few years because of what happened in the real estate market. The problem is that if you remember 2008, you might get uncomfortable with thinking, if I wanted to buy before I sell, that would be great if I have the mechanism to pull the equity out. But then again, the catch-22 is I don't want to go back to '08 where I had 2 mortgages and then I had a problem financially. So looking at what I see in the history books right now, everything is aligned perfectly for making a move. And if you want to know about a mechanism, there are mechanisms to be able to do that. And then the final thing that I wanted to touch on is supply and demand with demographics. So look at this next one. So this is the population estimate in 2022. So it was just almost 2.5 years ago, or 2 years ago. Look at these segments. So if you look at the purple, it's Gen Z, which equates 12-year-olds to 24-year-olds. That's 68 million. And then jump over to the green column on the right. That's 69 million, which is the baby boomers. And look at that age. That's where I fall in the category. But that's 60 to 76. And then, of course, you got Gen X and millennials, which we hear so much about. But if you add all those folks up, that's 275 million prospects that are in the market wanting to buy, sell real estate, or build or invest. So in closing, what's unbelievable about the market here in Ohio, I just noticed I got this newspaper article where it talked about the top 20 emerging real estate markets, and Ohio's in 5 of the top 20. And the crazy thing is Canton, Ohio is number 3 in emerging markets in the next little while. And probably the reason why, I imagine, is because we always find that interest rates will come down, but the affordability factor is big. And when you're in the surrounding areas of Stark County, Canton, or even in Ohio, real estate's still pretty affordable. And it's just getting those interest rates in line. So that's pretty exciting news for Ohio and as well as our backyard. So if you have any further questions, you want to know more about what's happening in your neck of the woods, call Dominic Fonte at 330-418-1535. You can call or text, or if you want to send me an email, go to dominic@dominicfonte.com, or if you want to check out my more than 430 5-star reviews to see what you'll experience working with me and my team, feel free to check it out. Thanks for tuning in.